Hi there, investors. I'm Stuart Kruse, and thanks for coming to Momentum Wednesday, where we help you get over that midweek hump with some momentum stocks. But before we get there, let's talk about something that's looming less than a week away, and that's the election. And we know from past videos is that the S&P has been an amazing predictor of who is going to win this election. It's been right almost 90% of the time over the last 70 years. And when the market's up by an average of 6%, the incumbent wins. When it's down by an average of 2%, the incumbent loses. So where are we? Well, we've just had a humongous sell-off, down a little over 5.25% over the last week. But really, 90 days out would be August 3rd. And where does that put us? Right in to negative territory. So what that would suggest, though, in spite of being in Trump camp for pretty well entrenched here in the incumbent winning, this last week's sell-off would suggest it's Biden that's going to win. Now, I know the polls are up and say Biden should win, but also there are some levels of shy voters that we haven't seen before in the past. And the odds makers in Vegas that had Trump losing, or the odds of Trump winning in 2016 were only about 15% 6 days prior to the election. And we know what happened. They're at 40% right now. So with the shy voters not really reporting, and some of the, or a lot of the swing states are extremely close, I would say the jury is still out as to who actually wins. But the good news is, at least as far as the market's concerned, that if you're an investor, if you were going to invest in either just be an investor when the Democrats were in office or the Republicans were in office, if you had invested $10,000 about 70 years ago, if you had invested when the Republicans were in office, I just heard this stat, they would be worth about $75,000. If you had just kept the money in when the Democrats were in office, it would be worth about $250,000. But if you were an investor when both parties were in power, so all the time, it would be worth over $2 million. So what that says is the market goes up in both camps, but you want your money to be working for you all the time and not trying to be timing which party is better for the market. Okay, so here we have the S&P 500, and this is just, we're out 90 days. But let's look at what sectors we know have done the best. And here we have the home builders, the technology, and retail are all up here on the chart. Whoops, let me get all of them there. And so this is out 90 days. Really, we know in a 3-month window, the S&P has been very flat over 3 months, and retail has done the best. Home builders and technology has done okay. And then over a 6-month window, everything looks very, very strong on all counts. But what has just hit the momentum radar is consumer discretionary. And consumer discretionary is now showing up in this kind of pinkish purple color, up 27% over a 6-month window, and over 3 months, up 6%. So it's done well from a momentum standpoint. And I do want to point out over these last 2 weeks, so if we put a 2-week chart up here, over the last 2 weeks, the market is down pretty considerably. All sectors are down in spite of having good momentum. So even having good momentum can't save you from a down 2 or 3 week period where I think we've been down like 3 weeks in a row. Let's take a look at since October 5th. Oh, it looks like that was an up week. Since the 12th, we're down pretty considerably. Okay, so let's clean up this chart. Let's take off the spiders. We'll take off the home builders, technology, and retail, and that just leaves us with our consumer discretionary chart over the last 6 months, which has been up 27%, about twice that of the S&P 500. And the best names within that sector are, as you might guess, Amazon. Chipotle is a good lockdown story. Best Buy, good online story, and Nike and Target. So we had Best Buy at the top here for almost up 50%. We did a whole report on that and how they have held their own against most technology companies, and it continues to show excellent momentum. But another thing I want to point out is over this 3-month window, you have Nike and Target that are the clear winners here, while Amazon is just barely, actually Amazon is underperforming the consumer discretionary and just barely outperforming the S&P 500. So while Amazon did very, very well in the beginning part of the year and ran up, this might be indicative of it just getting a little too ahead of itself. Its multiples expanded a little too far. We're starting to see a little bit of inflation, which would be hard on high PE stocks. And so over these last 3 months, 90 days, Amazon has underperformed its own sector. Okay, still outperformed over 6 months, but underperformed its own sector. So that might be indicative of it being very hard to kind of grow into these multiples in this environment. All right, so there you have it. You have some momentum stocks in a momentum name, Consumer Discretionary, for your Momentum Wednesday, and a way to get over that hump for the week. So this is Stuart Kruse with Kruse Asset Management, reminding you and trying to help our clients live their life with the odds in their favor.